we understand what Bitcoin is. We understand the functionality. We understand the benefits. We understand the problems. But what if Bitcoin was global money? And that's what I've been trying to think through for the last week or so. It's like, what if all there is was Bitcoin? That's it. And just very similar to maybe gold or precious metals a couple hundred years ago. So anyway, could you summarize that idea, and then let's just keep going and take it further into the future?
Yeah, I've been talking about this life raft idea actually for some time. I think I probably first wrote about it for Global Macro Investor, my research service, back in 2012, when I was in Europe and we almost lost the whole European banking system and almost Europe itself. And after I'd seen Cyprus, where everybody got bailed in, i.e. you're a depositor in a bank, minding your own business, the bank goes bust, they take your money. I realized that, okay, this is a big problem. And, having gone through the financial crisis and seeing nobody knows who owns what. So we have, and then the debt upon debt and derivatives upon derivatives, looking at all of this thinking, Christ, where's this going to go? How is this going to play itself out? I know, there's been a lot of talk, well, they'll inflate their way out. But inflation, deflation, they're more nuanced than I think anybody really expected, because we have wage deflation and we have inflation of assets. And that wasn't something we quite got our heads around early on. But we're now realizing it's much more nuanced. What it generally means is savers are going to get screwed in this environment to benefit the debtors. Now, the next phase of this battle seems to be the central banks and their digital currencies. What they're doing here is realizing that the digital infrastructure is the way forward for making money transferring mechanism much simpler. We've been stuck in this kind of weird world of monetary economics versus Keynesian economics, i.e. fiscal stimulus versus monetary stimulus, and a number of different things. And the central bank digital currencies are about to change all of that, because you can give different stimulus incentives to different people. So that's the rise of behavioral economics, much like Facebook does.
Right.
And so there is also a big talk about, okay, is there a new Bretton Woods coming? What is coming here? What do the central banks want to do? Because they're over-reliant on the dollar system. The dollar, the US, is 25% of world GDP, yet the dollar is about 80% of all transactions on Earth. So there's this problem that we talk about, the dollar shortages and the euro-dollar markets and all of this stuff that gets wrapped up into it. And other nations, sovereign nations, feel that it's excessive. So if you're South Africa and you're a commodity producer, you're beholden to the US dollar at all times, and your dollar funding is everything. And that's true of even China. So countries have started to say, listen, is there another way? And the IMF and the BIS are both talking about this, which is maybe banding together and creating like a global currency basket, not like the euro, not a single currency, but a basket that Facebook Libra had decided upon with their groundbreaking idea of including the dollar in the basket. Because right now we understand currencies denominated against the other, right? Dollar yen, euro dollar, stuff like that. But if the dollar's part of the basket, what's the denominator? It's probably global money supply.
Yeah, so like gold was. Wouldn't that be like going all the way back to that?
That's right. And so, but gold, everybody was pinned to gold. And we'll come on to this pin to idea later, because that's the Bitcoin discussion. But everything was pinned to gold. But this is like a basket of currencies, like the European exchange rate mechanism. The problem is as we get co-opted into this new digital system, we're now totally beholden to what the central banks choose to do. I think some of it's going to be amazingly powerful. I mean, if we could have done the fiscal stimulus directly from a central bank to a restaurant in Minnesota, okay, that would have helped massively, but we hadn't. We got the banking system that doesn't function, that's in the way, and other intermediaries. But this whole mechanism can change that. So there's some really good benefits. Behavioral economics, the plus side of them are good. The bad side is you can manipulate people, and governments tend to get nefarious.
I think the words you used with Anthony Pompliano, hopefully I'm pronouncing his last name correctly, I got it written down here. It was programmable smart money. I think that kind of hits the nail on the head as far as what this could do.
Well, I could give you money that you have to spend in 24 hours and you can only spend it on groceries.
Right.
That gets rid of all of those coupons that they give out in the US, or, you know, it can change basically the whole structure, completely change it. Now, the problem is that there is a good side to it, and I think it's good, and I think it's better than what we've got. The bad side of it is it puts even more power in the hands of the creators of fiat money, the central banks.
Right.
So this is where Bitcoin starts to really stand up on its own, because this system is digital. Bitcoin is natively digital. In fact, it drove central bank digital currencies. That's why they exist today, or are just being built out. But it gives us a way of voting with our money outside of the system we're in. So, you know, this is why if you look at the top traders or users of Bitcoin around the world, it's Venezuela, it's Colombia, it's Latin American countries, it's South Africa, countries who have dollar funding problems and weak currencies. So people understand what they can do with it. It's much more effective than gold to kind of step out of the system and say, well, I trust this thing more. Now, well, we will likely get taxed for that, and there's not much you can do about it. Yes, you can try and operate entirely outside the system, but my guess is you have to on-ramp and off-ramp to your own native fiat currency to pay your taxes or whatever it is.
And just to be clear, in your view, it's better than gold because it is programmable. You can hold the banks, or whomever's holding it, you can hold them more accountable because it's all on the ledger, and it's just far more efficient is probably the best way of saying it.
Yeah, that's right. Because let's say you're a central bank and you're just using gold, and I want to give George Gammon a stimulus because his restaurant in Minnesota is not working. Right, what do? I transfer gold to whom? Well, it's not to you. So then it has to go to a bank, and the bank needs, you know, the whole thing still requires intermediaries. But with this, I can give you direct money with terms and conditions attached into a contract. And this is not the first time it's been done. The Japanese tried this back in the mid to late 90s, where they gave vouchers to people with a time element attached to it. So they said, we're going to give you a stimulus, but you have to spend it by a certain date. Now, bizarrely, which most economists didn't realize, is the Japanese saved it. Because they were so, you know, that whole balance sheet recession idea of repairing your balance sheet, they didn't want to spend it. So it's not, you know, not necessarily will this work, and not necessarily will it drive inflation and all of these things, but it's just a very interesting system. What I was talking about is Bitcoin's superiority as a collateral asset.
Yeah.
So because as a collateral, US Treasuries are the world's collateral, right? That's the form of US dollars that the whole financial system uses as collateral.
Yeah.
The problem is with that collateral is the US can issue as much of it as they want. So the intrinsic value of that collateral over time falls. It does so in interest rate terms, and it does so in terms of total supply of dollars. So as an asset, it's not a great reserve asset. But Bitcoin doesn't have that. So it has this solidity to it. Now, the problem it has is price volatility right now, because we haven't got to full price discovery phase. But its future potential superiority as a reserve asset is incredible. It's pristine. It has no claims on it. Well, US Treasuries have like 32 claims on the average Treasury bond.
Right.
So there's not that whole layer. And because you can figure out who owns it, and it's also immediately transferable, and you don't need a middleman, it's phenomenally good collateral. So in terms of the world's best collateral, this is probably it. I don't think you could have invented anything better. So that helps all countries and governments, because you're not then using dollars as a collateral, as the basis, because, you know, whatever collateral you need for the loans, well, imagine if you can use Bitcoin as collateral. So this starts to help some of the issues, but you're dead right. It doesn't stop the insolvency issue. Now, why do we have these insolvency issues? A lot of it is because of the shortage of dollars, that people need to borrow more of them to use it for trade. So it creates this endless amount of dollars that people need. Now, if you didn't have the dollar as such a dominant force, this is what the IMF and the BIS and everybody else are saying, then we don't need to have this reliance on the dollar, and we can start shifting away.